Please welcome to the stage Greg Lloyd from EY.
Good afternoon, all. Hope everyone's having fun. I'd also like to welcome Les Matthews from Mastercard here to join me on stage, here to talk about BNPL becoming big business.
Greg,
Thanks for joining.
appreciate it.
Yeah.
Looking forward to the discussion.
Yeah, me as well.
A few notes just in case I forget things.
So Les, let's start with some baselining, or not freebasing. That's the second after party for those interested in that, but just some baselining here. Let's talk about Mastercard for a second. I'm sure there's a lot of people in the room that think of Mastercard just as a network. You guys are so much more than that. Maybe talk a little bit about the breadth of what you guys do here.
Yeah, we are so much more than that. And I've been at Mastercard for 13 years now, and we've grown from a 4,500 person company to 25, almost 30,000 people if you count all the contractors in that period of time. And our business has also really expanded. It's grown, and the breadth of it is so much more. I think when most people think about Mastercard, I mean, listen, if I'd probably need $100, but for $100 for every time someone asks me, you know, could I get them a card or could I help them with their interest rate, they really think that Mastercard is just a card-centric company, and it's no longer that. I mean, that's a big part of our business. We are a services business, we're a technology company, we're a multi-rail company that plays in so many spaces throughout the world. I mean, we're one of the world's largest loyalty companies. We have a payments consultancy. We play in the cyber and intelligence space. I personally run a business in North America. It's our services business. It's almost a $3 billion business, and it's just services. It's our payments consultancy and our cyber intelligence business that I manage across North America, and it's a significant part of our revenue, and it doesn't come from cards, it doesn't come from clicks and things like that. So it is a really dynamic company, and it continues to diversify.
And I heard Loyalt in there as a consultant. I'm all about points. You can get me extra points somehow, right?
Yeah,
Some sort of multiplier.
I'll work on that, yeah. Make a phone call as soon as we leave, yeah. We are a points bank. Maybe I can just, you know, shift something for you. Yeah.
That'd be great. So we're here to talk about BNPL, but maybe let's define it, because in some discussions I have, well, we've got there, right? We've got these installment loan things, we've got these credit card things. So when we're going to talk about BNPL here, what exactly is it? Is it about the moment of approval and the moment of transaction? Is it something else? How do you think about it?
Yeah, I mean, for me, the way that I think about buy now, pay later is, you know, really just that, right? Like, I can go somewhere, I can make a transaction, I can put a small down payment on it, and I can walk home with whatever it is that I have. I think, you know, philosophically, the way that Mastercard thinks about buy now, pay later, and I guess me by adoption, is that it provides another way for consumers to transact and receive the goods that they want or that they need. And I think and I know we're going to talk about this a little bit, I mean, there's a lot of differences between buy now, pay later, between credit cards and traditional loans and things like that. But, you know, typically buy now, pay later, in our context, it's one-time use. So you may have a lender approve you for $5,000, but if you only use $500, that's it. The line is typically done. It's an installment, so, you know, and the lender can set the terms. So, you know, I think typical is 4. You might see 6 installments. You might see 12 installments, right? In our case, and in some cases, it's interest-free. You know, so it allows a consumer to be able to, you know, diversify their buying power and extend their buying power at the same time. You know, if I think about it in my own context, if I want to go buy a $3,000 TV, why not go get a buy now, pay later loan, pay it off in 4 installments that are interest-free versus putting it on my credit card, right? It's another tool for me to manage my finances. But I think in the most simple form, it is really just an installment loan. And it harkens back to the days of layaway, right? You know, I can remember going to Kmart's when I was a kid and asking for things. Yeah, I know, what's Kmart? And asking for things and putting them on layaway. But it was hard walking out of there with that immediate gratification. I want to walk out of there with something in my hands, and I think that's the real value of buy now, pay later. I think there's a lot of companies that are doing this today, and they have different models. Some do charge interest, some might charge fees. It's all around the world. So there is no real one consistent model in terms of how it operationally works, but at the end of the day, it's go to the merchant, be approved for the loan, walk out with the item, make the payments. If you want to do it again, you start over.
Yeah. So you talked about a lot of different models in there. We're all familiar with Klarna and Afterpay and OPY and OpenPay in Australia, and there's all these different companies. How does a network fit in? Like, how is a network model maybe different from that or fit in with some of those existing ones?
We're better. Listen, I think that the value that a Mastercard brings is we sit in the middle. We make it easy to get connected to lenders and merchants. We already have rails, right? We're not building new rails. We already have rails that this can sit on. And at the end of the day, I just think it really makes it easier, right? And I think our scale also brings something to the party because, the Klarnas and the Affirms and, the other buy now, pay laters, they have to really be thinking about how they make money. And we do too, don't get me wrong, but we have a very diversified business that allows us to, charge fair prices and enable an ecosystem that isn't as costly. So that's a lot of the benefit. And you've seen, Klarna's been riding a wave, but all of a sudden they laid off 700 people, right? They've got a lot of eggs in one basket. And it's a great model. We partner with Klarna. We do things with them. It's no knock on them as a company, but as a really diversified company that sits in the middle of the merchant, acquirer, issuer, fintech ecosystem, it would just made sense for us to do this, to be honest with you. And the way that it works is that this runs across our card rails, like a credit card payment or debit card payment would run. And there are different underwriting and different things like that, and we can talk about that a little bit more in a second, but it runs across our card rails. And so the integration, particularly from a merchant point of view, is super easy, right? We go through the acquirers, they light it up, all they have to do is opt in. And it's very easy for them to do that. And issuers can then set their own terms and do the things that they want to do on the lending side as well.
So maybe let's go down that. You talked about in the past two questions, you've talked about customer experience a lot. And I always, as a product guy, I always try to think the customer experience is the most important.
Sorry, I'm taking my wallet out. It's hurting my butt.
Is this for the
say
points?
that out loud, but yeah, it's all the points in my wallet. No, it's all the credit cards. Sorry, okay, customer experience.
So, in today's world, if I oversimplify a little bit, today I've got a credit card. I can put all my transactions on a single credit card. Simpler customer experience. I go to one place to see everything, pay everything. Then move into this BNPL world of today.
Yep.
I might have bought one thing with Klarna on Best Buy. I might buy something else from a different company. I might have 2 to 3 BNPL providers, and within each one, I might have 2 to 3 different loans.
Yep.
And I've heard discussion as we move into the future, some people talking about white labeling. So I might go to, with my co-brand card, I go to a given merchant, and now I get BNPL direct to that merchant. So now all of a sudden, it gets to this, all right, I have one thing now, then I might have 2 to 3, and all of a sudden, maybe I have 10 different merchants, I've got different loans, and how do I manage that? Maybe if I challenge the industry a little bit, what are the things we have to keep in mind for the customer experience? How do you think about it to make sure that this customer experience stays clean for the customer? Because I get terrified thinking of a customer having to pay 10 different sites and how they budget and keep track of it.
Yeah, it's a great question, and I don't know that I have a really great answer other than it's something that we have to work on, right? I think the industry that I sit in is not known for their consumer experience. Let's just put it that way, right? And so I think I'm going to talk about this in in 2 different aspects, because you talked about sort of how do you pull in, if you have a Klarna and an Affirm or other buy now pay later loans, right? So I think and I'm not trying to sell Mastercard, but I think the beauty of our solution is it allows issuers and fintechs to be able to integrate that experience into their own CX, their mobile app, right? So I can go onto my Truist mobile app, I can apply for the loan, I can be approved, I can see how much I have there, I can see what transactions I made, how many installments I have. That's just another part of my experience in the Truist app. I have my checking account, my savings account, my 2 or 3 credit cards, my mortgage, and it really becomes a relationship play, right? And issuers there's no reason why they can't issue multiple loans. So if I need multiple things for multiple reasons, then why not issue more? And that's an issuer decision, right? And their underwriting and their lending decisions. But that to me is a real opportunity to build that into the overall relationship, right? So that's from an issuer perspective, which not a lot of issuers, unless they're lending on the backside of some of these other providers, aren't doing that today. When you think about, and our one of my peers, he was responsible he's on a product side, so he kind of helped build this out. And it was explaining, he said, I went in and I got 7 or 8 different buy now, pay later loans. The challenge there is that there's no visibility into that. We don't know how overextended this person is. It's hard to manage. I mean, if you're like me, you might forget that you have this or you have that. And then, what if you screw up and you don't pay, right? So we have work to do on that side, and there's not a good, elegant solution. I think it's ripe for innovation, to be honest with you. And I think that you could see, something like bringing an app together that brings all your finances in together, or, an issuer saying, okay, I'm gonna, tap into an open banking concept and be able to actually draw in all the buy now, pay later loans so I can see it in one place, right? That would be meaningful, and I think is fairly easy to do if you can do that. My bigger concern becomes in how do you create the visibility if someone is running around opening it up 7, 8, 9, 10, and now all of a sudden they have all of this credit that they probably shouldn't qualify for, then I think that's the bigger issue, and I think that's what some of the other providers are running into, is that some of the defaults on some of these loans, because they're not getting full visibility into a person's credit, because this isn't always going to the credit agencies. I think in most cases it's not, if it is at all. So it becomes a challenge. So there's work to do there, Greg, no doubt. And I think it's an opportunity for innovation. And I think as a consumer, you have to think about who's going to provide you that best experience, right? And we know that consumers tend to trust their banks and their financial institutions, right? And so I think there's a big opportunity for financial institutions, whether they come through our solution or another solution or do something different, that they can bring this together for their consumers. Yeah.
And I like how in the middle of that you also threw in the Truist. Here we are on the Truist stage.
Yeah, I was being opportunistic there. I wish Bill was still in the room to hear me say that.
I can't see. These lights are so bright. He could be here. I wouldn't know it.
He could be.
I'm trying to think how to say this. I guess one of the things I struggle with BNPL is people talk about it a lot. We've got a lot of people using it, but at least some of the studies I've seen, people use it, but only a little bit, right? Like everyone's tried it. Certain generations have tried it more than others. But there's not a lot of wholesale adoption. And maybe that's fine. Maybe it's just for certain specific purchases, your $3,000 TV or something like that.
Yeah.
But as I think about it personally, I also think about maybe what's to learn in that. It's a new solution. There's been a lot of excitement, a lot of adoption. And I think about what have the BNPL providers done right? Like what's something that they've done better, or what's a problem they've improved upon, or what are things that we can take away that we should learn from what they've done? For example, better partnership with merchants, perhaps. What are your thoughts on like what can we learn from how BNPL is taken off and how it's done?
Yeah, in part, this was a phenomenon that started outside of the U.S. At least in Klarna's what are they, Swedish? I can't remember.
I think so. Yeah.
Company. There's Afterpay does big business in Australia, and in some of these markets. It was a replacement for credit, because credit isn't as, everyone in this room has a credit card, but that's not prevalent in a lot of first world countries, in Europe, right? A lot of people don't have access to credit. So that was really filling a void there. And so I think it took a while to really come here because it was sort of a solution without a problem in a lot of cases. But there started to be more demand for it, particularly amongst millennials and Gen Zers and folks like that who were sort of shunning credit, right? And some of the other things, okay, I can go get this, I'll pay it off, it'll be done, I don't have to pay a lot of interest. And so it is certainly in the early stages, I guess, in the evolutionary stages. I think what we can learn from the other, the businesses that have been out there for quite some time is let's kind of learn from their mistakes. Let's learn from, are we looking at a service that is sort of one-dimensional, kind of a one-trick pony? How can we build upon that? Can we add loyalty and rewards to it, right? Can we use this as an entry point for other financing? Can we report to the credit agency so that it can help people build credit? There's a lot that we can do around buy now, pay later that's not being done today that would make this much more useful, beneficial to the consumer at the end of the day, because in and of itself, and I'll be the first to tell you, and I hope this doesn't get back to my boss because she'll be pissed, but the utility of it just as an installment platform isn't that useful other than the fact that maybe you don't pay interest, right? It is a little easier to get approved for buy now, pay later loan. You might not be approved for a credit card, but you might be approved for buy now, pay later loan. So, the underwriting isn't as stringent and things like that. But at the end of the day, the reason Mastercard got into this business is because we felt like we could build upon it, right? And we're just at the infancy of it. I mean, I go back to when we first met, actually. What was that, 6 or 7 years ago at a conference in San Francisco. I was still living in San Francisco. I was running a different team, and we were still gung-ho about wallets, right? And that took an evolutionary turn, and it went from wallets to, okay, can we improve, increase contactless payments, and obviously over the pandemic that really exploded. And now, when I was at the very beginning when we were launching Apple Pay, and I remember everyone was saying, "Oh, this is going to be a dud. There's no reason for this. It's not solving a problem. Who can't take their credit card out of their wallet?" I think we'd have all hands down here if someone in here said they hadn't used contactless, right? Or their mobile device to pay for something. That is prevalent today. And 6 or 7 years ago, we didn't know that was going to be prevalent, so we just had to continue to evolve. So as we sit here today and we think about buy now, pay later, the utility of it is there, and there's good usage. And listen, it's, by 2025, they're saying $7.2 trillion, right? This is going to be big business, but it can be much bigger than that if you add utility around it. And I think that's really where the focus should be, is how do we add the utility around it? How do we make sure that, going back to your earlier question, how do we make sure that we have a good consumer experience? How do I make sure that if I walk into, a Target or a Best Buy, do they even have stores anymore? Or places like that I can, either on my device or at the point of sale, make a purchasing decision and walk out of there with my Super Bowl TV or my big grill or whatever I need for, that big weekend or that big party, and be able to do that in a seamless way that is painless, right? And I think that's where this is going to evolve to. And again, just give another option for consumers, right? To be able to, buy and purchase.
Yeah. And tying together with sort of the customer experience too, for me, thinking about like a lot of those, like for example, returns, right? Like returns are different for different companies.
Yeah.
And so just improving some of those experiences, making it cleaner.
Well, right now that's a bit of a mess in this space, to be honest with you. And it's something that we're working on and we're focused on as well, but I think that's a challenge, right? So how do you returns or chargebacks or anything like that that's embedded in this, financial ecosystem? I mean, that was one of the things that I was telling about my colleague. He was talking about a return. He said he tried to return something and it took him weeks to get it, the money back. And so we have work to do there. And this wasn't our solution he was using, but it's and I think that, why running it on the card rails does make that easier when it's not on the card rails and it's not associated to an actual bin number, to a bin, and it's not backed up by a PAN, then that makes all those things very difficult to do. If you can do those things, which our solution essentially runs on a virtual card. That's basically what it is. It's a virtual card. And so that makes doing those things a lot easier, and which is why the merchants are so eager to opt into the solution, because they know that it's just going to be easier, and the issuers know it's going to be easier. And so we fully expect all of our competitors to follow suit very quickly, and that'll be good for the ecosystem. That'll create competition, right? And we're not afraid of competition. We'd love to see more people enter the market.
Yeah, and I think for me, this is one of those things where all boats rise, right? If we get better adoption, better standards, better integration into the customer experience, it's good for all of us.
Well, that's what happened with contactless, and that's what happened with, sort of the wallets and stuff. Like, we, believe it or not, Mastercard actually sits down with Visa, and we talk about standards and making sure that it's consistent, right, across the board, and Amex and Discover, and some of the emerging other networks. We work with them to ensure that these standards are consistent, because we know, it is a competitive set of people, but we know it's good for the ecosystem. Yeah.
So I want to jump back to something else you said earlier, and we were talking a little bit about things that we can learn. You mentioned one had a $700 million loss. Another company announced 10% layoffs. Yet at the same time, you've got new entrants. Apple, I won't ask you to on stage pontificate on Apple too much, but just maybe talk to me a little bit about how you see the market evolving with some of the older players, and then now we've got new players still entering it. Just kind of, I'll leave it open-ended. What's your thoughts on some of this evolution?
Yeah, some of the older players, I think where they struggle is some of the tools, the fraud tools, right? The optimization tools. And that's where they struggle with. So you have to think about, Klarna is a technology company. They're a technology platform that happens to play in this space, right? And while they are, and I've spent time with those guys, they're super smart. They don't have that ecosystem that we have, or Visa has, or Amex has around fraud, preventing fraud, detecting fraud, looking at fraud. I mean, the focus and energy we put, and I know because I run that business in North America, on preventing losses is humongous, and they just don't have the money to invest in that, right? I wouldn't be surprised to see them get gobbled up by somebody that does for the technology, So that's a bit of a challenge, for them, and so a lot of these other players have come to us, and we work with them and we help them, right? They're frenemies or co-opetition or whatever you want to call them, because we know that if they get blown up, then it's going to hurt our business. So we'd rather help them and help them figure out how they can be better, particularly when it comes to things like that. I mean, again, with us, we have the same on all BNPL transactions, same protections that you have on a credit card or debit card transaction. Zero liability, fraud controls, all of that stuff is the same thing that we provide for these transactions. We don't exclude this. And so for us, it's already built in. You talked a little bit about Apple. We had a big announcement with Apple last week. Apple's getting into the space. They're enabling buy now, pay later on Apple Pay. Their Goldman Sachs is the underwriter. They're actually self-funding all their loans, which is kind of crazy, but not crazy because they're sitting on like $300 billion of cash. So they can do that type of thing. Maybe I overestimated, but I know it's at least over $200 billion of cash. And they're using our infrastructure, right? So for us, what they are is just another lender on our platform, just like any bank could be another lender on our platform. They came to us because then that allows them to plug into all the merchants, right? We love working with Apple because then that has automatically given credence to the whole ecosystem, right? And like Apple comes to the table, and listen to me, I've had my ups and downs with Apple personally because I used to manage them as a relationship, and they're one tough customer. But they immediately bring a level of, like I said, sort of just stability, name recognition, and it's going to make people stand up and listen, right? And they're very thoughtful about how they jump into this business, but And they already have this great infrastructure that will enable these types of transactions and this type of business immediately. So, but still, they come to us for, as good as Apple is at so many things, they come to us for things like fraud protection. They come to us for things like, how do you prevent friendly fraud? We're calling it something else now. We don't like to call it that anymore, first-party fraud, right? Things like that. We work with them on a lot of different aspects, and not just them, Microsoft and Facebook and Google and all these technology companies, and our competitors do too, right? We're not excluding them. And so there's this partnership aspect there that we are right in the center of. And again, we want to help the Klarnas. We want to help the Afterpays. We want to help all of these guys, and we want to partner with them like we've been doing. We don't, and yeah, we're going to compete with them in certain areas, but that's fine too. But at the end of the day, we have a big business on helping others, and that's what we like to do.
We've talked about a lot of different brands here. I probably should have been born 100 years ago because I tend to be a brand loyal person. My understanding of current research is a lot of younger generations don't care as much about the brand. How much do you think the brand matters, whether it's a Klarna versus a Mastercard versus my issuer? Like how does that come into play, and how much does it matter?
Yeah. As much as we invest in our brand, I don't think, well, let me just be careful with my words a little bit because, listen, I don't think they care as much as we think they care. Let's just put it that way. And I think that's kind of across the board, especially for, younger generations. I mean, I tend to be brand loyal, but I like an experience, right? For me, it's all about the experience. And if the experience is good, I'm going to stick with you. And I don't really, and then I associate the experience with the brand. So if it's a bad experience, it's a bad brand. It's a good experience, it's a good brand. So that's why we focus so much on experience. I mean, we invest a lot in brand. We want people to know who Mastercard is. Obviously, everyone knows who Apple is. And I think Klarna is a pretty household name these days as well. But you can lose people at the drop of a dime based on the experience. And Mastercard is a company that's in a bit of a precarious space because we don't actually issue credit cards, right? We don't underwrite loans, but our name is attached to these things. And so our brand reputation is something that we hold near and dear, but I don't think people care as much about brand as maybe they did 10, 15, 20, 50 years ago, certainly, right? I don't think that's a big deal. However, doesn't mean that you can't make people stand, be loyal to your brand, right? And I think about, and we talk a lot about millennials and Gen Zers and whatever else is coming up next or what was right ahead of them, I don't know. But at some point, and we've seen this, I think 5 or 7 years ago, millennials, they're never gonna buy a house, they don't want credit cards, they're not gonna buy cars, they just ride city bikes everywhere they go and scooters. And then they got married, and then they started having kids, and then they decided, well, maybe moving every 2 years isn't cool, so I'm gonna buy a house. Maybe carrying my baby carriage on the bus isn't cool, so I'm gonna buy a car. Maybe I need a couple credit cards because I need a few things. That's when the point of brand loyalty arises, right? I have very few financial brands that I work with. I like everything in one place. I want to see everything. And I bounced around a little bit because of experience. But when I found something that worked, I've stayed there and I've become very loyal. And research is telling us that the younger generation is doing the same thing as they sort of, get into the later stages in life and some of the things that come with that. And so I think, you can inspire that loyalty, but it takes a while and it's easy to screw it up. And so that's what you have to be really careful about, is not screwing it up. Because people will not as much talk about the good things that you do as they will the bad things that you do.
Yeah. But also, and I think you said this with, digital wallets and Apple launching and the adoption that drives, and I'm sure Mastercard getting into this and others. I think even if there's not a tie to a specific brand, it's still the opportunity of having bigger brands come in and help solidify a space, create more standards, make it more consistent, improve the customer experience. Like it helps elevate it.
Yeah, gives it some credibility, certainly. Yeah. As long as they're not a brand that people hate. But yeah, there's just a lot of big brands that people don't like.
Yeah, I've got a few.
Yeah.
So 15 minutes, we'll open up for questions in a minute. So if people have questions, we'll probably get, in about 5 more minutes, I'll open it up for questions. So start thinking of your questions. Before we get to that, maybe if we try to cut to brass tacks here a little bit, a lot of people in the room, I'm sure we've got some financial institutions, we've got some merchants, maybe we've got some fintechs in here. Admittedly a broad question, how would you help people frame their thinking? Like, why should they care about BNPL, but at the same time, why should they not? Like, how do they think through it of why it matters to them or not?
Yeah, so maybe I'll sort of address the second part of the question first, which is, I think in our business, in our industry, there's a lot of Me Too behavior. So don't get caught up in the Me Too. This isn't right for everyone, right? There's a lot of community institutions and credit unions that maybe this might not be right for, right? Maybe the investment in it, even though it's not a huge investment, isn't right for it, right? I think that if I'm and that same goes for smaller merchants, right? Like, or even some big merchants. McDonald's isn't going to sign up to be a buy now, pay later merchant, right? Really there's kind of a target sort of threshold in terms of price, and we don't set it, but you're not going to go in and buy a bag of licorice and put it on buy now, pay later. It's just not going to work. So you have to think about, does it fit into your overall strategy, right? At Mastercard, we've always said we want to enable consumers to pay the way they want to pay, using whatever device they want to use, over whatever rails they want to use. That's what's important, right? And if you're an institution who has sort of this multi-rail strategy, you have consumers that, based on your own research, where this could fit into your overall strategy, it makes sense, right? So that's the thing, and that's what we are, telling our issuers and merchants. Does it fit into your strategy, right? And so, particularly as we go on the merchant side, and we've gotten some pushback from some merchants without question, but we're not forcing this, right? We're not telling merchants they have to do this. It's not a mandate. It's you effectively opt in, or you opt out, but it's easy to opt out. And what we're saying to them is, do you have a business that supports this model, right? And that's what we're coaching them on. And we're actually going as far as, working with them, developing merchant dashboards. Once we start to see transactions, we're going to go back to them and we're going to demonstrate that. Does it drive brand loyalty, right? Does it drive overall share of wallet? Does it drive bigger ticket prices, right? Those are the types of things that you have to be thinking about, both as an issuer and a merchant. Is this going to be accretive to your business? Or is it just going to be another, NASCAR sticker that you stick on your website, right? And like the wallets were, we're across the street from the NASCAR Hall of Fame, so it's appropriate. But it was like the wallet wars of 5 years ago. It was, you go to a website and you see 13 different things on there, right? I wouldn't want that if that was my website. So for me, it really does boil down to, does it fit into your strategy? Can you prove the worth? And I think that's the question that you have to ask yourself. And that's how we're approaching our partners, is we're helping them prove the worth. And we know that not everyone is going to sign up. Not everyone is going to enable this, which is totally fine. But for those that do, we want to make sure that they're getting value, and that value is going to come in, like I said earlier, consumer loyalty. It's going to come in larger ticket prices, bigger share of wallet, things like that matter to this ecosystem.
Yeah. And by the way, I'm sure there's somebody in the audience who now has a challenge to go out and use BNPL for $1 purchase.
Good luck.
Maybe we can give an award at the next
I want to know about it. Yeah.
So just over 10 minutes left. Let's pause for a second. I've got plenty more questions here I can ask, but would love to hear questions from the audience. So maybe if we can see folks want to raise, I can't see, the lights are too bright, but if folks have questions in the audience, you want to raise your hand? Did I see someone? No. Oh, no.
Gotcha. Hey, Nick Williams from EY. Just curious, with acceptance cost over the years generally coming down, compression from the merchant discount rate, buy NPL, just send it sky high. Do you see acceptance rates from BNPL kind of coming down following the same trajectory of general card acceptance rates, or do you have a different opinion?
You had to ask the controversial question. No, listen, I wish I had a crystal ball on that, to be honest with you. I don't. And I would imagine that as we learn more about buy now, pay later, and we see how things are moving and the value that it brings, that could very well be the case. But you can't quote me and say that rates are going to come down. I may argue that they aren't sky high, but I think that's for everyone to decide on their own whether or not they want to do it. We're very transparent, to the merchant, ecosystem, and that is something that we've gotten some pushback on. But again, I hope this doesn't come off as cavalier. Our attitude kind of is you don't have to do it. If you find value in it and those costs make sense to you, then do it. If you don't, then I would encourage you not to do it as a merchant, right? If you can't find value in it. And we're working really hard to help people find value in it and demonstrate that value. But what the future holds, who knows, right? Those folks up in that place in Capitol Hill who don't know anything about our business, love to regulate us, and figure out things that frustrate us. And so we are, always sort of balancing, how is the ecosystem going to react? How are the regulators going to react? Where's the value really sit within all of this? And it's a constantly changing motion there. And so let me come back in a year. You can ask me that same question, because then we'll have some transactions, we'll have some real traction, we'll be able to see what's really happening, and then I can give you a better answer in terms of where that's going to fall once things really get off the ground. Because at the end of the day, our solution personally has just launched, like literally this month, right? I will tell you that our cost, our fees that we are putting into the ecosystem are typically much lower than the players that are outside of our four-party model.
And the interesting thing for me, and I won't put I'll leave you out of this and Mastercard out of this, but at least for me, I did some research on this for another conference a month or two ago, and the interesting piece for me was, I think at least from what I saw in my own research, the rates can go from 2% up to 7%, and then talking about converted purchases, higher carts and all that. But I had trouble making my own way through the data, in that to me it seems like there's uptick, greater conversion, higher cart size, all that in any type of point of sale lending. Yeah. So at least for me, researching the data, I had a lot of trouble attributing things like that directly to BNPL versus any other type of point of sale lending. So I'll admit, for me, again, leaving you and Mastercard out of it, like for me, that's something I really struggled with, is how that comes into the rate that high.
Listen, it's going to be an evolution, right? And we're going to see things change, and they're going to change probably fairly rapidly over the next several years. I mean, and again, you look at things like the mobile wallets, right? Apple still charges, Google doesn't, right? It's a philosophy as well, and I think the utility of Apple is greater than in terms of transactions, right? And so it doesn't necessarily stop people from using it, but we catch a lot of flack as a company about the rates we set and things like that. I can tell you, for someone that's been at this company for a long time, we obsess over trying to do it the right way. We get input. We're never going to please everyone. We've come to that conclusion a long time ago, but we obsess over trying to do it the right way by getting the right input, right feedback, and we'll continue that process as we continue to roll out Buy Now, Pay Later, so that we can hopefully set the right tone and get to the right place.
I'm almost afraid to open it for another question, but I'll take it.
That's fine. You can bring. I don't mind the hard questions. It's fine.
I've got one. Back in the back. So how should merchants think about which providers to work with, right? You mentioned the NASCAR, equivalent of all these different logos on the page. But if I'm a merchant and I'm trying to pick, do I work with Klarna? Do I work with Afterpay? Do I work with Mastercard? Do I work with Apple? How should they think about that when making that decision?
Yeah, I think there's a couple things there. So some merchants are okay having the NASCAR page. So they think that, optionality is great, right? So, from a consumer point of view, maybe I'm loyal to Klarna, or maybe I'm loyal to Afterpay or Affirm or something like that, right? And so they want to have all those options, right? And then, some merchants are saying, no, I don't want that. I want one or two providers, and I want to make my life easier and simpler. So that kind of is what we hear a lot from our merchant partners. Is that's kind of the start of their philosophy. Then it boils down to things like ease of implementation, ease of ongoing and doing business, right? And so, is there a lot of maintenance costs? Do I have to do a lot of updates, to my, website? So they're always thinking about things like that as well. Then they're thinking about the cost factor as well. Who's gonna, what's the cost factor? What's the scalability of it as well? So who has the greatest reach? So these are all inputs that we're encouraging our merchants to think about, and we literally are sitting down with them, helping them do analysis based off of all of those components, right? So when you take out the philosophical question, do I want to have a NASCAR page or a non-NASCAR page? And then do I want to select one, maybe two providers? How do I select those providers? How do I compare them against each other? What value do they bring? Who's going to help me see the biggest benefit and scale the most from the solution, right? And who's going to be the most cost effective? So it's not really, Bill was talking about keeping things simple. I'm paraphrasing, right? And I'm really a simple animal. And for me, it is really that kind of simple, right? Let's do an old-fashioned business case. Let's pull out the Excel spreadsheet. Let's put some things, down the side, and let's figure out what makes the most sense for our business. And then let's measure it on an ongoing basis so that we can see what kind of traction we're really getting. And so I think that's how we're encouraging our merchant partners to look at it. And it is just really rolling up your sleeves and doing the analysis on the value. The other thing, too, is that where it becomes trickier is life cycle, right? So, we're new to the business. Klarna's been out there for a while. Afterpay, right? They've got more traction. People know that they're doing this. And so they're going to drive more business than we are right now. And so that may have an influence in terms of who you decide as your provider. But you have to keep track of that, because at some point, maybe we'll overtake them, right? And so you have to just make sure that you don't put them all in your basket and keep them there forever. You may have to switch providers over time.
So I think I saw over here. Mike?
I think you mentioned that you see some BNPL offers that are interest-free, and my question to you is, given the horrible inflation that we've been seeing, are you guys seeing your partners or yourselves modifying the clauses to include something about inflation in the contracts, or even the pricing, the interest rates?
Not yet, is the short answer. And I think in part for us, it's just because we're so new to market. And, like I said, we're literally launching just this month. We'll start seeing transactions this month. I can tell you today, as I sit, unless I've missed something, every issuer that has committed to our platform is going interest-free. Doesn't mean they have to, but is going interest-free. That could change over time. Certainly what's going on in the economy could drive some changes to that. But the beauty, I think, one of the beauties of our model is we don't interfere in how you underwrite. We don't interfere in how you lend in the terms that you set. That's completely up to the issuer.
So I think we're out of time, so thank you very much. Enjoyed it, Les.
All right, thanks, Greg. Appreciate it. Thank you.